Hello there, you're watching Your Trades on ET Now. This is Priyanka Pal along with me, Snehi. Of course, again, a choppy trade on indices today. Nifty closed, traded below 25,000, closed with a loss of 0.5%. Sentiment is further hit because of the corporate earnings, of course. Broader market was not doing that bad. Small cap was, in fact, up by 0.3%. Banks were also trading with a little bit of pressure, but not that bad day. But the brokerage notes are being taken by the bulls today clearly. The top gainers on, Nifty as well as on the broader market also comes from the brokerage as well as AMC stocks. Now, HDFC Life, that happened to be the top gainer on the Nifty. Clearly on the, of course, the numbers, the kind of brokerage notes came in. CLSA, Jeffries, and in fact, Investec all had a buy note, hike the target price also. Similar story continues for HDFC AMC also. In fact, all the AMC counters were buzzing today. Now, in fact, HDFC AMC, that has the top 1 lakh crore market cap also. There also positive set of note came in from the broker, and that lifted the sentiment. Broking counters as well as AMC counters, like clear standout gainers today.
Absolutely, and you know what, let's just highlight some quick buzzers in today's trade also on the back of order wins. Ashoka Buildcon did well. However, what did not do well today was Zydus Lifestyle, Cochin Shipyard on the back of that government stake sale coming in. So a couple of pockets that did well and a couple that did not do well. But what's really going to be catching the street's attention is 4 Nifty companies that will be coming out with their numbers tomorrow, the likes of Nestle, Axis Bank, Infosys as well as Wipro. Now, all of these 4 stocks were choppy in today's trade, but it was Infosys that was down 2%. So let's just see what happens in tomorrow's trade. And also, we also have a news flow that the coastal shipping bill is likely to get the cabinet nod. So shipping stocks could be a buzz on the back of this news flow once confirmed. But well, this is a developing story and we'll be getting you more on that. But on that note, let's move ahead then and hear out Sanjay Mukim, the head of India Equity Research at JPMorgan. He divides the Indian market into cheap, ugly and reasonable sections. He classifies sectors into these spaces as well. Let's go across and listen in to find out how he has classified various sectors as well as group of stocks.
If you were to somehow scientifically model it, is the Indian financial. The large cap banks or even the, let's say, the smaller banks, some financial set shows up as being growth stocks with reasonable valuations. The trouble that we've all seen is that the sector has been under pressure for a while. Just performance-wise, it's not kept up with the market. And now we are seeing some pressures on the earnings momentum of financial sector. So there are genuine reasons to believe that the growth momentum will slow down for financials. Cheap, absolute-wise, you'll find some utility companies, I guess. I wouldn't classify it as an ugly basket, really. But utilities have not re-rated as much as perhaps the rest of the market has. So, and you can find something at low double-digit PE in India in that basket. Almost the rest of the market falls in the other, which is in an expensive category. Whether you measure it relative to their own historical price to earnings bands or relative to peers, rest of the world, relative to market, or apart from financials, utilities, and a handful of stocks here and there, almost everything qualifies as big reasonable success.
Okay, moving on. D Street has been under pressure since the global sell-off started. In fact, we've been underperforming other global markets also, with Nifty down 4% since then. While Wall Street majors are sitting on a gain, so has the market peaked out for the year, or will we see another bout of rally? Kunal has some charts that can give us a clue.
Let's look at that. We're using the word little, which is that markets are doing little on the upside, little on the downside. But after this patch of consolidation, are we likely to have a last hurrah before the year ends, or it's goodbye to a new high for this calendar year? So Kunal, on a scale of 1 to 10, what are the chances that we've made the high for the year?
So I think if I assume that the highest rating at the highest number is 10, then I think almost 8 or 9 is where we've made a high probability that we've made a best high for the index so far this year. Now, the data point which actually suggests this kind of a understanding is we've looked at the RSI reading on the monthly charts, which is a much more broader indication because it tries to absorb all the phases of market moves over the last 20 years for indices, and then mapped it up with the Nifty price performance. Now, interestingly, that whenever the RSI for the Nifty has crossed about the 80 levels, we call it a zone where the indicators or the index is overbought. but that doesn't necessarily mean that the index would keep on correcting. We wait for a phase where the index or the RSI tops out and falls below the 80 levels. Historically, we've seen that whenever that has happened, it's actually led into 3 months or at least 6 months of the markets going into a phase of correction / consolidation. Now, just to give a very recent example, 2021 was a phase. This was the recent charts for 2021. The Nifty RSI crossed about the levels of 80. What followed was a 6 months of painful time-wise, price-wise consolidation for the index before we managed to gain momentum and come back again on the upside. The second and the most interesting part, Nikunj, is that we looked at the market breadth, and that's the best way to try and analyze the index trends. In this last leg of sell-off, the 10 days, 7-8 days of sell-off, only 7 stocks or 8 stocks were below their 200-day moving averages. Okay. Then followed a bounce, which we ideally believe that if it's a bounce which is very strong, then the number of stocks should reduce. But the number of stocks have actually increased of these stocks going below their 200-day moving averages. So that's another indication that the market breadth is deteriorating. And when we see a rally after a bounce, after a sell-off, we actually expect the market breadth to improve. If that deteriorates, it's indicative that the markets are going into a phase of consolidation and not ready for a big breakout.
So what could be that range? 24,000 to the previous high 26,000. Could that be the range for next 3 months now?
Yeah, the broad range when we look at this, so 25,000 should act as a pivot and we should swing 1,200 points plus minus that range. That's the ideal range for the index.
So 25,000 is the line in the center.
Yes.
1,100 points here and 1,200 points on the upside.
Correct.
So it really could be, like I said at the beginning of this conversation, little of nothing, little of downside and little bit of upside.
Yeah, absolutely. And 3%, 2% swings on the indices are natural course of price action. It's not something to fret about or to worry about. It's a natural phase of the markets going into a phase of consolidation and correction. And
which is actually healthy. But the fact that optically Kunal feels that we've topped out for the year, you may not like it, but that's the way markets are. I think they're getting into what is called as a healthy consolidation move. So mentally, just draw a line, 27,000, 25,000 on the Nifty. Worst case scenario could be 1,500 points from 25,000. Best case scenario could be 25,000 above 1,500 points from 25,000.
Right, some interesting set of data and levels to spot out for, in fact, on the charts presented by Nikunj and Kunal. Thank you so much. But let's move on and shed some light on what we're expecting to see when it comes to Nifty earnings tomorrow. And let's start by looking at one of the two IT companies, Nifty IT companies that will be coming out with its numbers, and that's Wipro. My colleague Anisha is joining us with a quick roundup of what we can expect. Anisha.
Well, from Wipro, we are expecting it is going to be a flattish performance this time around. So the constant currency growth is expected to be flat in middle of the range that they had earlier guided. So -1 to +1 was the kind of guidance they had given for Q2. We are expecting it to come in the middle of the range. Overall, there's expectation of improvement in margins. So 16.6% is what we are penciling in, and that would mean a profitability of around 3,050 crore. In terms of the top line, while financial services has done well, there is a bit of a slowdown when it comes to manufacturing and energy. That will play its part as far as growth is concerned. Margins might see a bit of an impact of the 1-month wage hikes, and that's why the growth might be limited. And overall, in terms of deal wins, we are expecting it's going to be closer to $1 to $1.5 billion. At least that's what Kotak Securities has to say. Overall, in terms of guidance for the next quarter, Street is working with an assumption of -1 to +1%.
That's the expectation for Wipro, that what we are penciling in. Also tell us what to expect from Infosys.
Well, overall, it's expected to be a good quarter from Infosys. In fact, we are expecting a guidance upgrade to come by, so that could be the big highlight for the quarter. But in terms of the numbers, we are expecting the constant currency growth to be around 3%. Dollar revenue is expected to shoot up by 3.3%, and hence the rupee revenue is expected to be closer to 40,900 crore, so that there's a growth of around 4%. The margin is also expected to show a bit of a bump up, so that operating leverage will kick in, and that's why a 20 basis point improvement to 21.3%. Profitability as a result of all of that is expected to jump up by 5%. A number of 6,700 crores is what we are expecting. There is going to be an impact of the Intech acquisition, and that's why a percentage point could be added in terms of revenue from that. EBIT margin, as I talked about, will be benefited by higher utilization rate, better productivity. There's going to be no wage hike impacts. All of that augur well for the operating performance. Also, in terms of the deal wins, Kotak is expecting that the deal win will be closer to $3 billion, while Citi believes it could be higher at around $4 billion. So let's see which way it goes. But finally, on the guidance, they had earlier talked about a 3 to 4% growth. The street is now expecting that it could get bumped up to 4 to 5%. And on the margins, however, they are likely to continue with their guidance, which is around 20 to 22%.
Okay, thanks Anisha for taking us through what to watch out for when it comes to Wipro and Infosys's numbers. But let's also talk about another Nifty company coming out with its earnings tomorrow from the FMCG space, that's Nestle India. On the standalone basis, revenue is being expected at 5,294 crores, which is an uptick of roughly 5 to 6% from this revenue figure this time last year. EBITDA is also being seen at 1,258 crores, up roughly 2.5 to 3%. PAT is expected to decline slightly 6% on a year-on-year basis, and you have factors like exceptional items that are going to be one of factors which will be weighing on the PAT this time around at 852 crores. EBITDA margins, however, are seen to be expanding slightly from 23.7% to 24.3%. Volume growth expected to come in at 3%, and what important factors are going to be to watch out for is going to be pricing strategy, volume growth, the raw material scenario given cocoa and chocolate have become more expensive, including coffee as well. So, well, yes, we'll be keeping a close eye out on all of these earnings tomorrow, in fact.
All right, so that's what we're expecting. So can be a miss on the PAT, at least what we can expect from Nestle. Well, that's a wrap on Your Trades, this edition of Your Trade. Thank you so much for watching. Stay tuned for more updates from the business world. Tweety now.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.